Hello, everyone. Welcome to our 529 Enable Solutions webinar series. We are pleased to have you join us today for our May webinar and 529 Day. My name is Mary Creeksfeld. I am on the ISS Marketing Intelligence marketing team and will be moderating today's webinar. We have Paul Curley, Director of Savings Research from the ISS MI 529 Enable Solutions team. And today, Paul will present the top trends in 529 plans and ABLE accounts, discussing where the college financial planning industry is today and what we see impacting the industry landscape going forward. If you have any questions during the session, please submit them in the question section in the GoToWebinar control panel that can be found on the right side of the webinar screen. We'll do our best to address the questions throughout the session and any remaining ones at the end of the presentation. However, if we do run out of time, we will follow up directly with you. And with that, I will hand the presentation over to Paul.
Thank you, Mary. Much appreciated. Happy Friday and happy 529 Day. It's a great day, and thank you for celebrating with us as we try to help the industry raise awareness about this important issue. Just as a quick recap, today is part of the 529 webinar series that we've been hosting. We had the one on March 31st, which was much more of a primer industry overview topic. In April, we talked more about the legislative update and landscape, a lot more of the fundamentals from a legislative perspective, but today we'll be providing the top trends in 529 and ABLE. And of course, part of the goal is to really raise awareness and understanding about 529 plans and the importance of college financial planning overall for the series, but particularly today, as it is 529 Day. Today's agenda, as we have with prior webcasts in the series, we'll be talking about industry announcements, and we'll also be highlighting certain data and research updates that have been released over the past month. And of course, we'll talk about the top 10 trends in 529 and ABLE. Thank you for your collaboration, support, and much appreciated. And to start off, as we have in prior months, we'll start off with a poll just to see better understand the audience here today. And with that, Mary, can you pull up the poll for today just to get a response for the different categories we have on today's call? And Mary, just to confirm, are you able to see the responses start coming in for the poll? There we go. Yeah, I can see on the we changed format from Zoom to GoToMeeting, and I can see the responses coming in. 20% state in Treasury departments, 32% proc providers and distributors, 16% here today in that financial advisor and broker-dealer home office category, and 32% other. It's great to see the three different categories here today, because we really try to focus on providing that 360 view to the industry in our presentations, and this presentation here today, poll here today, helps us to confirm that item. So thank you very much. So before we jump in, just wanted to announce that we have launched today our newest 529 industry analysis. It includes a lot of the proprietary survey of parents on the topic of college financial planning and what really is needed from that legislative, product marketing, and distribution perspective. There's a number of topics that we wanted to get a deeper dive into. And interestingly enough, the survey was fielded in late March, early April, so very timely in terms of getting a pulse of what's going on in the market today. If you're interested in getting more information, inquire today. And as a quick side note, some of the slides today will be leaning from and gathering from that report. So look forward to discussing more. In terms of 529 industry updates, there's a couple different things that we want to highlight. First is that there was announced earlier this week that Morgan Stanley will be launching a new advisory plan sold through the Morgan Stanley advisors, and they have launched that through the state of North Carolina. Morgan Stanley will be the plan administrator, program manager, and distributor of that plan, and North Carolina is the state agency that will be affiliated with that plan. It's supposed to launch in later this year, and we'll be tracking. And of course, the next item that there's a new advisory share class. Putnam launched that new wide fee structure. It won't have a initial or deferred sales charge. And we've seen a number of plans already in place, with advisors sold plans already with different fee-based, share classes. So great to see Putnam's launch, and we'll be, tracking that as well. Earlier this week as well, Morningstar released their annual 529 landscape report. It's very timely, and of course looks at how COVID-19 has impacted the those that are saving currently, and also the outlook. The Morningstar annual report that more focuses on metals and ratings gets reported in the fall, but that being said, it's still a great report to take a look at. AKF Consulting and Andrew Fierstein and the great team over there, they'll be releasing the College Savings Nation 2020 report next week, and hopefully today, but fingers crossed, and we'll be touching base with Andrea. It's always great to see what's going on in their minds, and especially with all the great work they do with the state administrators. Later today, MIFA will be launching a 529-day Twitter chat at 2 p.m. Please join. I'll be joining as well. As you have any updates, please email me. Thank you, John Finch. We're taking questions throughout the session today, and I'll be tracking the comments as well. But then jumping in, for the Able Act column, just thinking about all the different things that's going on there. So Social Security Administration has been had a seminar, but they do great work on that ongoing education, whether it be content, Twitter, social media. They have a seminar series. I highly advise anyone who's looking at the Able market to take a look at their the Social Security Administration's great work. Patchen, they've been very responsive to date. So please check out their seminar. I also want to highlight in the past month, Capital Morning Report had an article called "Keeping Up." That was penned by Dante Allen of CalAble, really providing his perspective as both the executive director of CalAble, but also his own personal history and perspective on Able accounts and the community as well. It's a great one. I'd also like to note that Bryn Conroy has released an article called "Able to Work," and how it shelters money from the asset test. It's a great topic, very timely. Bryn Conroy, I presented with her at FinCon last year, and FinCon will be has shifted to a digital event this year. But Bryn Conroy also goes by name Femi Frugality. She came out with a great book, and in that book she has an entire chapter that is built and based around Able accounts. Intrigued about that book that came out probably like 2-3 years ago at this point. Called her up, interviewed her as part of the 529 Insiders, blog that we run, and she's been a great support of Able. Great work so far, and that article was released. New videos on YouTube. It's great to see MIFA once again. Mentioned on last page. We mentioned here today. Mary has been doing great work in terms of just getting the message out about about Able overall. She's been probably doing several YouTube videos and per week, and partnering with a lot of different great groups. Vermont Able also released a YouTube video this week, much more educational in nature, and that's all the updates we have in the Able space today. As a quick side note, in a nonpartisan comment, part of the Joe Biden's platform released yesterday has included that within his platform, he will be looking to champion and help pass the Able Age Adjustment Act, which would increase the age of onset from 26 years old to 46 years old. Look forward to learning more about the topic as well. Please feel free to email me with any updates. And as a quick note on that Able market data, last month we had much more early estimates. These are the final numbers here today. And it's great to see the long-term growth of Able accounts. That 70% asset growth and 58% account growth in 1 year. It's great to see. It's great to see the growth. Average account sizes continue to rise as well. If anything, through this market volatility in early 2020, we've actually seen the Able accounts continue to increase both in an account perspective, but also asset perspective, and great to see all the different flows within that activity. As a quick side note, roughly 34% of the assets within ABLE accounts are either in money market accounts that are FDIC insured, and the investment options themselves are much more risk-based in nature. So as opposed to age-based, so that the market fluctuations have been a lot more moderated within that particular audience. And as we think about the goal of 529 days is really to raise awareness, as part of the annual survey that we fielded, earlier this year, as mentioned, we've seen the overall awareness of 529 plans increase among those saving for college, but not with a 529 plan, which is great that the news is really kind of getting out there amongst the saving community. Those that are not saving for college currently, the awareness hurdle continues, amongst those that are not saving. So I think there's great movement and increase in overall usage of 529s and awareness of 529s, and especially among non-529 college savers, but there still remains an opportunity to broadly get that word out there about 529s, and hence all the great activity you'll be hearing today about it relating to the 529 day. How do we engage and get the word out there? Here's the top 10 sources of information for college savers on college saving. Friends and family is a great category. The financial advisors, the community events is something that jumps out to me, because so far it's been a little bit more difficult to host community events, whether it be for 529 or ABLE, but to the extent that there are that is an opportunity that I would expect to go forward, and of course we'll I also mentioned Brock Jolly and all him and his team's great work in terms of just doing those community events. So this is a great sort of opportunity to really think about where to get the message out there. And of course the ratings providers, we mentioned Morningstar and how they'll have the new ratings coming out this fall, but also that social media push. Right. In terms of other data that we've released this month, and we also looked at new this year, not just the current age of the 529 beneficiaries, but how old were 529 beneficiaries when the account was opened. What's interesting is about a third of 529 accounts are opened within the first two years of the account. 529 accounts tend to be opened in the first 2 years of the beneficiary being born, and then the current age of 529 beneficiaries is closer to that high school age. What's intriguing, and as we think about all the market volatility taking place in the market today, is really thinking about the long-term, goal-based investing that we're all looking to. Are we saving, if we're putting it differently, if we're saving for, in my case, a 7 and 4-year-old, is the market volatility a bad thing, or is it actually a great time to buy the market on discount, for that 10 plus year run for myself? So it's definitely, thinking about the market volatility and thinking about how long we're going to be, investing these assets. It really helps us to ride the wave, and college financial planning is that long-term goal. So that's the intro part, and now we'll be jumping into the top trends. The first top 10 trend is the value of education continues to rise. What's very intriguing, and these data points actually come out every single month by the Bureau of Labor Statistics. Like the first one is the income differential based on educational attainment, but also the unemployment levels by the level of education attainment. Obviously, both of these charts have moved. What's very intriguing to me is how the unemployment rate has been shifting up and down, almost in stack rank order, to the level of education. So put differently, someone with that achieved education up to high school and stopped have continued to have higher levels of unemployment versus those with education. Twisted or stated differently, income and unemployment differentials continue. In April, in the value of education, therefore 529s continued to and through 2020, despite the market volatility. Another topic that we've heard is some people saying like, oh, the cost of college will go down. Well, I think one thing that's intriguing is that based on the College Board, is that there was a 9% decrease in state funding per student over the past 10 years. And with the based on conversations that I've had so far with the tax date, federal tax date moved from April to July, there's also a pushback and delay in terms of just some of the visibility for some states in terms of the budget that they may have in terms of being able to fund college in the future. And so with the continued expenditures for colleges, that funding gap being filled by the state would be perhaps decreased, which people would then point out that the tuition inflation is actually more projected to increase rather than decrease. Broadly speaking, the tuition increases have been have aligned with higher demands of those saving and paying for college. So that broadly speaking, that is a good trend within today's environment. Looking at the solution, pivoting from the importance of college is still high, the cost of college is still high. What's the solution? And that is saving and saving efficiently. Based on this year's study, 42% of parents are currently not saving for college, while 58% of parents continue to save. We've seen an increase, from compared to 2019, an increase in 529 savers, and a decrease in those saving for college, not with 529 accounts. And one would actually, my thinking currently is that in the past, people have used, say, money market accounts or bank accounts to save for college, but now that money is being used and earmarked for emergency funds, that people are using, planning to use, the bank and bank accounts for college, but actually starting to use 529s more for 529s, as that's the vehicle that is designated for that goal. Looking at the topic number 4, it's important to engage the entire family. For 529 users, we also ask the question, who else also has an account, whether it be grandparents, aunts and uncles, ex-spouses, and others. And what we have seen, and what's very intriguing to me, is that college financial planning has become more and more of an entire family goal. So there's the usage amongst grandparents, increased this year. That category of aunts and uncles have basically gone from 2 or 3% not too long ago, whether it be I believe it was 3 or 4 years ago. But over that past 4 or 5 years, we've seen aunts and uncles increase, grandparents continue to increase, ex-spouses to also increase, in the other category to increase as well. I think what's interesting as well is that the in talking to a lot of attorneys, that the some of the ex-spouses maybe court ordered to start saving and contributing to a 529 account for the beneficiary. So that may be part of the reason why the ex-spouses are saving more for that joint goal, or that's just one theory as of today. But as we think about the overall what's going on within this the data, is that people are saving not just for the parents, for the beneficiary, but it's really going to all the different other family members as well. And that's a photo that I included. Actually is more proof, if anything, that yes, I do occasionally not wear a tie. So that's me actually in shorts. So I guess that's a double benefit. But I think it's a great photo because it kind of shows myself, my brother, some aunts, uncles, the grandparents to my beneficiaries. So it's a kind of great holistic photo. So I thought today's attendees would appreciate that. And looking at the fifth topic of the day, broadly speaking, we've been seeing that increased flexibility of 529s, going from pure college tuition to peripherals, whether it be computers and laptops and screens and internet connection, but also with the Tax Cuts and Jobs Act in 2017, we've seen that expanded capability from 529s to K through 12 tuition. We've also seen that expanded flexibility to ABLE Financial Planning Act, allowing qualified rollovers from 529s to ABLE accounts. And I think that in looking at that prior slide where 35% of 529 accounts are opened at the age between the ages of 0 and 2, that I think it's, if anything, more important now that we look at the data from that perspective, the importance of the ABLE Financial Planning Act. And also looking at the Secure Act, there's been the expansion more recently towards at the federal level, the expansion of qualified higher education expenses to apprenticeships and student loans as well. So I think that those legislative wins are leading to the product wins. And of course, it's also worth noting that those Secure Act changes took place at the federal level, meaning the federal tax implications of qualified expenses in using 529 plans. But like a number of the states are still in that decision mode, undecided. Some have decided to not allow, which would actually lead to clawback provisions for any prior state tax deductions and things of that nature. So it is worth noting. And I'll just take a quick look at the question. In your view, what impact will Vice President Biden's inclusion of ABLE Act Inclusion Act in the presidential platform have in raising awareness of 529 ABLE accounts? Thank you, Patricia. Patricia Roberts of giftofcollege.com. Broadly speaking, whenever key members and institutions talk more and more about ABLE, it's been a good positive thing that, broadly speaking, increases awareness and understanding of ABLE accounts. Since they were launched roughly 4 years ago, arguably awareness is still an issue for 529s, and for ABLE accounts, we're still at that stage too. Another way to put it or think about it is also we've had a number of calls with even the IRS to really encourage them to get the message out there, get the awareness out there. Based on the feedback, there's been more interagency sort of coordination to really just raise awareness and understanding of ABLE accounts, broadly speaking. And building upon that, based on the feedback, IRS actually did a couple different short 2-3 minute videos on ABLE accounts. They've had a couple of publications around that topic as well. So I think broadening out that specific question to all the different agencies, whether it be the federal level, all the great work and outreach that the states do, but also the plan administrators, the program managers, and also all the different great community leaders that help to get ABLE passed, but also to now that it's launched, to accelerate going forward. And thinking about it, and thank you, Patricia, as well. It's a great way to think about it as the product has been launched from a legislative perspective, now from a product perspective. And the next big stage that needs to come out is that raising of awareness. And then based on the awareness usage, and then based on the usage, the product can be improved. So I think that's where we are in that cycle. And then in terms of ABLE accounts, continue to grow from assets and accounts, and it'll be interesting. Thank you. And then when we think about the what has always been around is the ability to use 529 plans, not just for college, for undergraduate, but also the mid-career training, acceleration, and retooling as well. One of the larger conversations and trending points is really around the concept of retooling. After having a number of people not being able to work or out of the workplace, and for the short or perhaps even long term, there's been a lot of the discussion around how to retool the workforce. And 529s are a great way to have people go back and training, whether it be an evening MBA or even like the apprenticeship, or to find different ways to really just educate and re-educate a number of people. And the Sharon Epperson, she just of CNBC, she just released an article today on 529 Day, but she did actually pick up my quote of thinking about 529s as even a career emergency fund, so that one can actually save up, say a certain percentage of your income over time, and get that automatic contribution going, get the account up. And if one wants to either take a mid-career training, whether it was for me doing my evening MBA, or even a career change to another direction, perhaps going in and getting a master's degree in something else, or just changing over to apprenticeship, or finding different ways to retool. There's all different ways that one can save up through a career. Perhaps I'll use it for my own beneficiaries. Perhaps I'll use it for my own career, my wife's career, and perhaps if they don't use it, we can use it for the next generation. Aunts and uncles, there was no shortage of of nieces and nephews in that last chart for the family. So I think it'll be a story point that we'll be hearing more and more going forward. And I think that on that topic of the employer, state and tax benefits, we had the slide, last month as well, but just to reiterate, but for Idaho, great addition in 2020. There's 8 other plans, 8 total plans, 7 additional states that have various types of state tax incentives and benefits. they are structured slightly different, state by state, whether it be tax credit, tax deduction. Broadly speaking, it's been helpful to work with larger employers in each of the states, and just helps to kind of get that word out there. So that's great news, and I think it's very timely given the new platforms that have been launching around those partnerships, and of course the student loan debt repayment conversations, by way of Abbott Labs having their PLR, now with the CARES Act providing extension to all firms with a limit. I think that the more and more college financial planning employer benefits, broadly speaking, has been beneficial to getting more people using saving, planning, and paying for college. The more holistic that the college financial planning is seen as part of a much bigger puzzle, all the better in terms of people saving. And looking at this topic of the employer channel from a couple different perspectives, I'm looking at the market data perspective. 1.7% of gross sales in the first quarter came from payroll contributions, which is great news, and I think that will and should and could continue to increase. Looking at a parent survey perspective, 73% of those that enrolled in 529s through the employer earned less than $100,000. Some people ask the question around like not wanting to support the employer channel incentives because it's perceived that it is only for the wealthy, but seeing that 73% earn less than $100,000 that enrolled through that employer channel is very helpful. I think looking at how we grow the industry, it's the number one pivot for those not saving for college to start using 529. That employer contribution match is a great incentive for those not saving at all. The second one, which is even more intriguing, not even an employer match, just having an employer offer a 529 contribution opportunity, is the number two driver for pivoting non-savers to start saving for college. Looking at the employer channel, 8.1% of employers offer 529s through their to their employees, and we expect that to continue to increase over time. And looking at the advisors, 22% work with retail and institutions, and based on our research of the advisors, 39% want to learn more. So just jumping on, taking a quick look at the question. As it relates to mid-career retooling, are online certificate courses an allowable use of 529, or is it only qualified educational institutions? Thank you, Barbara. There's looking at online certificate programs. One way to take a look at it is through the Department of Education, if the school is included on the list of programs and schools that are eligible for FAFSA. Those schools are able to accept assets from 529 plans. That's one marker. And I think just top of mind, I think that's pretty much the way that we would currently look at it. I think as it expands to, there's been continued discussion around like using 529s in the future, perhaps for different credential programs, not just whether it be colleges or programs or apprenticeships, official apprenticeships or colleges as allowed through the Department of Education for FAFSA. But I think there's been more and more discussion around that, using it for credentials as well. So more to come. Great question. And one topic that we've seen more and more that's obviously very timely, great trend is around the gifting to accelerate the progress towards goals. We talked about the parents saving for their children, all the different family members as well, and the automatic contributions coming from the employer channel. Another great topic is the opportunity around gifting. And as I'm thinking about Patricia Roberts, giftedcollege.com, it's giftedcollege.com is a great platform. Thinking about apps and other products, offerings, capabilities, but really thinking about those various one-time efforts, one-time contributions, whether it be birthdays, anniversaries, school year ending, and holiday gifts. Quick industry update from Fidelity. They've been working on their platform and making it more flexible as well, whether it be dropping the minimums, increasing the maximums, and I guess I wrote this presentation when I was slightly later at night, but I was thinking about it's giving the gift of 529s reduces the risk of ankle turning, and thinking about my own 7- and 3-year-old right now as well. But it's like no parent ever asked for more notes making toys For some reason, I continue to get those noise-making toys, and typically I just return it, get the money, put the money into the 529 account. But it's just thinking about the usage of the gifts as opposed to long-term usage of the gifts, as opposed to what may not even last a month in the life of a toddler. So it's a timely topic. Another topic is create a college financial plan. Top 5 parent questions in 2020, based on our research, kind of all takes a look around how to create that college financial plan, whether it be like, hey, I want to save for college or education, but also retirement as well, like how much to put in, looking at how much, like projecting out the future cost of college, and how to basically set up a game plan to effectively save and pay for college, and how is that viewed in the long term for financial aid packages. So I think in the last one is more, how do you save for college, how do you effectively pay for college, how do you repay the college, and it's just so important to create and execute a plan. And that I think is probably one of the best arguments out there for using or working with a financial advisor to really just sort of like, how do you create a plan? And if anything, it's just not just creating a plan, but helping you stay the course, and just in thinking top of mind, when there's market volatility, as it wasn't this year, the savings rate shoot up, but when times are great, the savings rate was almost zero. But before this, not too long ago, perhaps 3%. So to the extent that now that the savings rate is high, the financial advisors can really kind of help people just to put on those automatic contributions, and just not set and forget, but set and forget on those automatic contributions with additional one-time contributions from gifting, all these different planning opportunities out there. So that's my thought on that topic. But it's also just important to get ahead of the debt train. It's coming. We're going to get hit if we don't, save and save efficiently for college. So I think one of the most amazing, just from a pure data person, is just every single year there's that annual increase in student loan debt. That red bar there is just so constant, and it keeps getting tacked on to the cumulative total of that blue. In this case, the trend is your friend from just understanding what's going on in that the student loan debt issue just keeps going up, but the trend is not our friend on this one, because the student loan debt just keep piling up. By way of quick anecdotal kind of thoughts and what I saw about taking a look at the 529 industry analysis, that we've seen a significant drop in 529 usage and saving overall for those under the age of 29. So those 25 to 29-year-olds have stopped saving for the future college expenses for their own children. And of course, as we hear so much throughout the news, it's more likely than not just due to the student loan debt issue getting bigger and bigger. So to the extent that we can save efficiently over the long term is the best way to do it. And so I think it's just so important for what we all do together. So to quickly recap, we talked about industry announcements. We talked about some data and research updates, top trends, and 529 ABLE. We do have another save the date webinar for June 30th. I like that, doing the last day of the month, so that that way we can kind of summarize the entire month's activity. So look forward to sharing and talking more at the future ones. But in the meantime, we'll be going over to the question and answer session. We have the disclosures here today, and I'll drop off the video just so we can effectively answer questions as they come in. So with that, thank you.
Thanks, Paul, and thank you everyone for joining our webinar. As Paul mentioned, we do have some time left for questions, and if you haven't submitted yours yet, please take a moment and do so. You can submit it in the questions box on the right side of the webinar panel. Another question did come through, Paul, during the presentation. Who do you think 529s will help the most in the future? Those saving for K through 12, college, apprenticeships, or mid-career?
So that's a great question. I mean, I think for college, it's been one of the longest standing champions and users of demographics of 529 plans. That being said, there's been a quick period for using the the K through 12 topics. So I think in terms of just growth, I think there's a great opportunity for K through 12, and especially the demographics that typically send their students to private K through 12 tuition. But I think that the largest opportunity for growth in demographics and using of the product in the next let's just say 3 to 5 years would be that mid-career folks looking to retrain, reinvigorate their careers, keep their skill set and chops and experience up, and I think it'll be a very important opportunity for us to retool going forward in the near term, short term, and I think that provides the most opportunity for long-term growth. So as we see a lot of the marketing collateral being used for the traditional parent saving for kids, I think it'll rotate to that beyond the grandparent to the to the grandchild, to I think we'll be talking more about K through 12 and definitely mid-career being a fast grower going forward. Thank you.
Great, thanks, Paul. And so I think with that, we'll conclude the webinar. If there are any other questions that you think of later, please feel free to reach out to Paul directly, and we will get back to you. But thank you for joining us today for 529 Day, and please expect a follow-up email coming soon with a link to today's webinar recording and our contact information if you want to reach out to Paul or 529 Able team to review anything that we covered today. Thanks again for attending, and have a wonderful rest of your day.